What's the difference again between gross profit and net profit? What's a balance sheet and do I need one? Yeah, my bookkeeper keeps sending me this profit and loss statement, but I have no idea what to do with it. Hey, if you're a therapist in private practice, you probably have some room to grow as it relates to what we call financial literacy. You're in luck because today we're breaking down some core concepts and vocabulary that you need to know as a therapist in private practice. Today, we're talking about financial literacy. Let's dive in. So first of all, what is financial literacy and why is it important for therapists in private practice or really any business owner out there? Well, financial literacy is just the ability to comprehend, understand, and use your knowledge and vocabulary about basic financial terms. Anything from managing your cash flow to doing cash flow projections, budgeting, and even investing. All right, so term number one, it's asset. What is an asset? Well, an asset is generally anything that is owned, whether it's tangible or intangible, by the business, or it's anything that makes you money. Now, a big debate between what is an asset versus a liability. A good example of this, or a place to learn more, is a book called Rich Dad, Poor Dad. In this book, the author really points out that, for instance, a house that you still owe money on is actually a liability because guess what? Things can and will break, therefore costing you money. Therefore, it's more of a risk than an asset. It's an asset when it's completely paid off and it's producing cash flow for you every single month. So in our situation as a therapist in private practice, what are your assets? Well, it might not be a ton, but it could be things like your office furniture. If you own a building, right, or own it outright, and that building can produce cash flow for you by renting it out to tenants or subtenants or whatever, that's a real asset. Maybe you can consider the intangibles, right? Anything like from the brand to the reputation of your practice. In other words, what is it about your practice that could be sellable or make it sellable? I personally sold my first group practice back in 2019. And so one of the major assets that went along with that sale was in fact our website. That website was a strong brand. It already had very strong organic traffic in that market and would continue to grow, right? And so the purchaser of that business knew most likely if it continued to grow at the rate it had been, that it was going to be a very positive investment. Another intangible asset to the business might be something like the email list for the practice. If you're not already building this one, then you should be building your email list every single week. I've got plenty of videos about this in this channel. That contact list, whether it's just a couple hundred or a few thousand, is really powerful because those are people that already know, like, and trust your business. What examples can you think of that's a difference between an asset or a liability? Let me know in the comments below. Term number two, it's liability. Now, a liability is anything that costs the business money, or I should say, cost the business money or could cost the business money. In other words, carries some risk. For instance, accounts payable, wages, payroll, etc. As you could probably guess, a car is really a liability, right? A car depreciates in value the second you drive it off the lot and it breaks all the time, thus constantly requiring you to put money into it. Now, again, you might be thinking, but it's an asset because it's worth something. But again, from a cash flow perspective, unless your car is fully paid off and actively producing cash flow for you, like maybe you're renting it out on one of the apps, then it's probably more of a liability. Number three, and this is a big one, it's your profit and loss statement or an income statement. You should be working with a bookkeeper who every single month goes in and reconciles your books. That means categorizes all of your expenses and then sends you at minimum a profit and loss statement or an income statement. A profit and loss statement just shows how much a business earned and how much it spent in a given period of time. Your profit and loss statement demonstrates the viability of your business, or really the financial health of your business. Ideally, your profit in the business, right, should be stable or ideally growing at a stable rate, or hey, maybe even an exponential rate. Number four, so what's a balance sheet and how is that different from a profit and loss statement or an income statement? Well, a balance sheet shows the company's worth at any given time. In other words, for most businesses, this is the cash you have on hand if you're a therapist in private practice, which for many of us is not a ton, although I do strongly recommend that you have anywhere between 3 and 6 months of your expenses, including your payroll, in a business savings account. If you have this account, then this is probably going to be counted in your balance sheet. Number five, what's cash flow? Cash flow is simply money going in and out of the business. Another term for this is liquidity. A business is something that is cash flow positive. You want to maintain a cash flow positive business at all costs. Okay, number 7. So what's revenue? Well, revenue is just simply the money received from sales. In other words, it is your sales. Number 8, and we're going to get a little fancy here, but now let's talk about gross profit. What is gross profit? The formula for gross profit is revenue minus the cost of the goods sold. Now, this is a little bit less relevant for us in private practice. An easier example would be, let's say you sell a hot dog. I don't know why I always use this example, but let's say you're selling a hot dog and you want to figure out the gross profit. Well, figuring out your gross profit would mean figuring out how much it costs you to procure that hot dog and the bun and the condiments and everything that goes with it. Once you've done that, you're going to figure out how much you're charging for that hot dog. The difference between these costs is your gross profit. Again, it's just the cost of acquiring or producing the product that you're about to sell. And finally, number 9, this is the one that really matters at the end of the day. It's your net profit or net income. This is the residual income that is left over after all business expenses have been paid. In other words, this is the money that you generally as the business owner get to keep. Again, when you look at your revenue, right? I see this all the time, especially with group practice owners that have really impressive revenue, right? Or gross revenue, and it's looking like $50, $60, $70, $80,000 a month, but their net profit, right? Their net income is really all that I care about. And sometimes I see that their net profit or their net income is way worse than the general standard solo practitioner. So there you have it. You're financially literate. Well, at least more financially literate than you were just a few minutes ago before watching this video. I hope this was helpful. By the way, if you're watching this video soon after it was released, the doors to our Business Made Human mastermind community are about to open and you don't want to miss it. It's a weekly mastermind where you meet with me and a small group of like-minded peers who are at your level, and we show you how to create a purpose-driven business, one that's driven by your personal purpose, your personal mission in life, one that fits around your lifestyle and not the other way around. We're also going to teach you the nitty-gritty of business. So if you like this lesson, this is an example of lessons that you're going to get every single week inside the Business Made Human community. Thanks again for watching. John Clarke from Private Practice Workshop here, and I'll see you in the next one.